the concerns are on three different dimensions. The first dimension is from which we think that we are in very good territory, but there's always room for improvement, is there systemic risk in the capital markets ecosystem itself, right? So are we running a risk of something that if there is some black swan event, what happens? So we think that we are reasonably well protected. However, as I said, from a risk management point of view, there is always room for improvement, and so that is one area that we will look at. The second is from a investor protection point of view. We have, as you know, published that research report to say that 9 out of 10 people lose money in FNO, and it is not a small sum of money that they lose. Now, we have adopted an approach of disclosure, for the investors to be aware of the risk and to, then make up their minds as to whether they still want to proceed or not. However, the trend that we are seeing in terms of even the type of trading that is happening. So, concentrated in weekly options, only on the expiry day, in the last 1 hour. Now, these are just speculative bets, right? These have no nature of hedging. These have no nature of, I would say no other nature other than speculation. So, the question is now that, what is it, if anything, that needs to be done further from an investor protection point of view? Particularly and we have seen anecdotally cases where people borrow money, including by, their parents are mortgaging their homes and everything, and then they are borrowing that money and putting it into this speculative activity. Is that a good thing? It's not a good thing. So, what, if anything, should the regulator be doing on this issue of investor protection is the second area. The third area is also from a larger macroeconomic point of view, that there is a large amount of money which is therefore now going from household savings into what is essentially not productive economic activity. Right? This is speculative activity. This is not going into any capital formation of any kind in the economy. So, what is it that we as a country should also be thinking about at a larger policy level is the third area that one must think about, especially as the proportions have grown. Turnover in index options in premium terms has grown from 4.5 lakh crores in 2018 to 140 lakh crores in 2024. 4.5 lakh crore has gone to 140 lakh crore between 2018 to 2024. This is turnover in index options in premium terms. Overall turnover in derivative segment has gone up from about 210 lakh crores in 2018 to 500 lakh crores in 2024. And the share of individual investors in index options has gone up from 2% in 2018 to 41% in 2024. 2020, FY 2024.
So you are saying that the working group will also consider this diversion of money or household savings towards unproductive?
It's a factor. It's a factor. It is not our principal mandate, but it is a factor that we need to keep in mind.